we already had some discussion of the office market in some of our earlier sessions during the day, but this is as a financial center, this is also an office hub. So a lot of the value of real estate in a city like Singapore is all going to be focused around the office sector. In terms of figuring out where this is going, it's very helpful to everyone in the audience to get those types of insights. So I'd like to I know all of you are here because you have a lot of experience in this sector. You've been involved in transactions in various ways. I think it's probably best if all of you introduce yourselves and tell us a bit about what you do, and then we can get more into depth about your experience and about what you expect from the office market. So Peng Wei, maybe we'll begin with you.
Hi everyone, it's good to be here. Thanks Michael for hosting us. My name's Peng Wei Tan. I'm at Blackstone, Managing Director. I cover acquisitions both in Singapore and the region.
And Terence?
Hello. Hi, I'm Terence from TE Capital, the Managing Director with my sister as well. We started TE Capital 2 years ago, and we invest in Singapore, Australia, and Japan for some high net worth family offices and funds as well with our partners. Thank you.
Hello?
Oh, okay. No, it's working. Go ahead.
Yeah, I'm Sen Yang from Cushman & Wakefield. I'm the head of research for Singapore. So we are an international property consultant, one of the biggest in the world. In Singapore, we're also pretty big with over about 2,000 staff. We cover the whole spectrum of property services from leasing, facility management, valuation, and all the way to capital markets. Yep. Thanks.
KK? I think that if you go with the base, there's a button in here. Let's have a look.
Thanks. Hi, good morning, everyone. I'm KK. I'm the Chief Commercial Officer from SDAX. I used to be in fixed income for the past 19 years, and now I'm actually very excited to be in the digital asset space. Thanks.
Sorry, we're just getting a little bit of help with the microphone. Make sure everybody's equipment is working. All right. Well, thank you all for those introductions. I think we'll all be able to speak normally now. Looking around at what's going on in the Singapore market, there has been a lot of changes. There's been rents are going up. Well, I think we have 5 straight quarters of rent growth now. 2021 was a record year for transactions, but at the same time, we've seen things dropping off pretty dramatically this year. So in terms of the fundamentals, is this still a solid place if you're owning office assets? And I think, let's see, so we've got 2 office asset owners here. We've got 1 research guy. We've got 1 high-tech innovation investment provider. So we've got some different perspectives here. So Peng Wei, you're speaking here on behalf of Blackstone. Is this still a good place to be in terms of office?
Absolutely. I think the fundamentals for Singapore office are some of the best in the region. Singapore, I'd say, and Seoul are probably very interesting markets. Singapore obviously has really established itself as a regional hub and is here to stay, and its handling of COVID has been exemplary. I think there's a lot of confidence in Singapore in general. You've seen that obviously in how resilient the economy has been. Last week when the third quarter GDP results were released, I think it surprised to the upside. I think it was higher than, growth was higher than what people expected it to be. Employment numbers are very strong. You're basically back to pre-COVID levels in terms of employment. So overall, I'd say the macro stats are great. From a demand perspective, I do think it was buoyed by tech in the last 2 years. That slowed down. But I think if you take a longer-term view, Singapore being an open economy, and we have a diversification of industries in the country, there will be something to offset that slowing demand. From a supply side, I think Singapore is probably one of the most interesting markets. Vacancy for Grade A office is sub 4%, it's probably in the 3% range today. I think that's going to tighten in the next few years, given that supply, and Xiangyang can comment on this later, but supply is, much lower than it's been historically. So, from a fundamental standpoint, definitely an interesting market to be in.
Okay, I think let's ask Terence. I'm not sure this is fair though. So Terence, you're a Singaporean from here in Singapore. I just met your father a few minutes ago. It has a name card that's similar to yours but different. Is Singapore the best? Or I could say I've seen you doing a lot of deals outside of Singapore in the last couple of years. Is this a good place to be in the office market right now? What do you expect?
I mean, we've been doing a lot of deals outside of Singapore, but I think Singapore is obviously, where our main business is at. So, we believe that in the long term, definitely it's something that we want to continue investing in. I think, like Peng mentioned, the fundamentals obviously in Singapore are strong. It's very pro-business. I think Singapore obviously has benefited a lot from, as a beneficiary of how they've dealt with the pandemic. And I think moving out and transitioning out of that, I think a lot of capital is looking to be allocated in Singapore. I think at the same time, like I think Ping mentioned as well, like finance companies, I think family offices are looking to set up in Singapore. So that only augurs well for rent growth. And I think if you look at it from that point of view, it's not just these companies that are setting up, but I think companies in non-banking sectors, non-finance related sectors, or even MNCs, they're looking to set up in Singapore. And I think, the long-term perspectives, prospects for Singapore, especially in the office market, I think we'll do very well.
All right, Xiangyang, you've got the advantage of having all this data flying everywhere. And I was reading your most recent Singapore office report, and it wasn't the office report, but the investment report about the 95% drop in transactions. Does that mean the market's falling apart here? Or are we going to see the drop if people aren't buying anything? Are asset values going to come down? What do I expect?
Oh no, actually. So actually, if you're an asset owner, I think this is the best time of your life, right? Because really rents are like just shooting through the roof. I mean, for office landlords, and really, there's in fact in the third quarter of this year, I mean, even after all the interest rates have gone up, we expect a bit more uncertainty, especially for the tech. Net demand for CBD grade A offices actually came up really strongly. I mean, stronger than really. It really exceeded my expectations. For a moment, I was thinking, is there something wrong with the data? But actually, no. You saw, vacancy rates. It was about slightly over 5%. It came down to below 4%. In just this third quarter of this year. And this comes even with a slowdown from the large tech companies. So where we think this demand is coming from is really from the non-bank finance, the professional services, because there's a lot of wealth that's coming to Singapore, like what Ping and Terence said, there's a lot of family offices setting up here. I mean, given the growth potential of ASEAN, right, which is going to be one of the fastest growing regions in Asia Pacific. Right, and that augurs well for Singapore, because I think sometimes you can also consider if you want to. Singapore is seen to be as a safe bet for Southeast Asia, given that it's a gateway city for the region. Yeah, and and really that besides demand coming in, what's really underpinning all this rental growth is really supply. Right, you can really see. I mean, Singapore is small; it's not huge. You can really see, where all your new supply is coming from. Right, like I think the last 10 years, annual average supply was about 1 million square feet. Over the next 6 years, it'll be about 0.7 million. So it's about 30% lower than your annual average. And so if supply remain tight, the grade A supply staying tight, and which is expected to stay tight also over the next few years, because the government's plan, it's always been, from long as to decentralize, commercial activities, right? And and what they've done is, they've limited new supply in the office because they want to encourage redevelopment, also for sustainability. So it doesn't really make sense for government to increase new supply, right? They can bring the rents down, but you also take away the incentives for redevelopment, right? So that situation, that demand supply dynamics remains very compelling for Singapore, right? And I think overall, the fundamentals look good, though of course, definitely right now, transactions have slowed because I think everyone So not to say that no one is looking away from the Singapore market. I think there's a lot of interest waiting to come into the Singapore market right now. It's just that it's very hard to get to underwrite that risk, given that.
All right, so let's get into that a little bit. I want to ask KK. So KK is looking at investments all around the region with SDAX, and they're giving people access to these investments. Xin Yang is telling me that this is a great time in the Singapore office market, that this is one of the best times to be here. But at the same time, if I'm looking at a Singapore office investment, is there something out there that's attractive that people they can invest in, that they can buy?
For us, the cost of financing has gone up quite drastically. I mean, in the past 2 months, if you look at the 2-year SORA rate, it has gone up by about 120 basis points, and that has seriously eroded the projected IRR of some ideas that we've been pitching to our clients. And the other thing that has changed is with the hawkish rhetoric from the central banks of the world, and investors are starting to feel a little bit more cautious. So what they want as the hurdle rate for them to consider an investment has also gone up quite considerably. So it's becoming quite challenging for us to actually structure something in the Singapore office space for our investors, despite the positive view of how the market is going to be.
So maybe everybody loves Singapore and they just love it too much? Is that, or they can't agree on how much what the right price is for love? Is that what you're telling me?
Well, we can't compete with the family offices and the likes that have the capital to deploy, right? As I last heard, I think there's still a backlog of about 400 to 600 applications with MAS for a RFMC license, which I guess is a reference to the number of family offices that are looking to set up in Singapore. So that's going to be quite difficult and challenging for us, where financing is one of the components of our structure.
Okay, so the rising, this is our new topic. This is, the KK just brought something onto our agenda here, the rising role of the family office in Singapore and what this does. I mean, I saw, I think, was that 16 Collier Quay? That's basically a family office deal, and that was from, I don't know for sure. No, I'm from Bangkok. I'm just in town for a couple of days. But I think it was like a 2% yield or something. Are we going to see more of these deals? Maybe, Xin Yang, maybe you can help me out here. Is this going to be a trend?
Oh yeah, so for that deal, I mean, because it's a longer lease, right? Freehold, 999 deals. I mean, historically in Singapore, it's always traded at about 2%, right? So that wasn't really a benchmark deal, let's say, because supply of this kind of assets, longer tenure assets in Singapore CBD is very limited. I think we estimate there's only about 10% of CBD office stock, that are of freehold or 999 year leasehold. Right? So definitely, there's a lot of capital that's waiting to go into this space. And I mean, this family office, high individual net worth, they're very specific in what they want. Right? Typically, they want 999 year leasehold. I think some of them are not very interested. They want a longer tenure, maybe for legacy purposes, right? And they also like offices with a view, like what you can find at Suntec. Yeah.
Well, we'll get into the sort of barrage of Suntec deals maybe a little later. That's given it's just across the street, we can get a nice view of them from here. I wanted to talk to Terence a bit. I guess, you must know half the people from these family offices if you're working here in town. Are they going to become more active now during this interval with some of the major international fund investors maybe standing on the sidelines a bit? What do you expect?
I think just to echo what Xin Yang mentioned as well. I think, like for instance, the office market. Firstly, it's really hard to find anything. If you're buying a big shiny building, it's hard to even shake those assets loose, because asset owners, whether they're REITs or they're local developers, they may not want to sell. So you either offer them a really high price, like something like what 16 Collier Quay ended up at, or you end up just missing out. So I think because of that, you can deem it more like a price inelastic kind of asset class, and because of that, it's harder to enter. And some of the points, like obviously with the specter of a looming recession about, these assets will still tend to trade at higher prices because you can't buy them. At the same time, with family offices, to answer your question, I think a lot of these family offices are coming to Singapore. They've got to find an office place. They're either going to pay higher rents for certain office floors that they're going to rent from, or they're going to look at picking up, maybe whole floors in Suntec or Samsung Hub for that matter. So I think it will have to become a case that the office prices will be bolstered and supported. So I think I think in the long term it should be quite good.
Well, let's talk about what's supporting some of those prices. I know for Blackstone, I think, was that last year that you made a pretty sizable investment there in the One North neighborhood, and that looks to me as very much a play on the growth of innovation, the growth of technology industries in Singapore. Maybe you can tell us a little bit more about what was behind it. They called it the sand crawler before. Now you've come up with some name which is so much, less movie-like. I can't remember. What was the name of that project now?
It's now called Eclipse.
Oh,
Yeah.
okay.
And we even lost the Yoda that we had in the courtyard. But I guess looking at business parks, and we made 2 investments last year, with exposure to the business park arena in Singapore. One was Sandcrawler, and the other one was the privatization of Soybean REIT. Largest asset in the REIT is in Solaris, which is also in One North, stone's throw away from Eclipse. What we really liked about the business parks is if you looked at the rent roll for those assets, 70% of your tenancy was really in the tech, media, life science, precision engineering sort of sectors, and those are all sectors that really outperformed and have actually still been pretty resilient through COVID. And you saw that obviously in the high occupancy. You had no delinquencies. You were able to, and rents have always gone upwards. They really they don't fluctuate as much as you see in the CBD. During COVID, in the CBD, rents went down probably 10%. It was pretty flat actually for the city fringe business parks. So we like that area because that's where the growth is, certainly in employment. The way I look at business parks is it's really a derivative of the CBD. So, the rule of thumb is you take, for the city fringe business parks, it's CBD rents, grade A CBD rents divided by 2, and that's how you get there. I think that's actually a really interesting play right now, just given that there's, especially for the tech companies who are becoming a lot more cost conscious, given the valuations have been whacked by the markets. If you're looking for affordability, being in one of the city fringe business parks is actually pretty smart because you're paying much less rents, amenities are good, you're getting high quality assets as well. And that's definitely something that drove our thesis in that space.
So okay, but if I'm an employer and I'm like, well, I know I've had you all in Asia Square here. I'm Amazon, and I've got 4 floors in Asia Square with jungle gyms and a swimming pool or whatever else they have in there to keep the staff around. I'm going to move you to One North. I would say there's something in that discussion that implies a fundamental shift in the political economy of the employer-employee relationship. Is that shift coming?
It's not like it's new. Google did that. Google was in the CBD and then it moved out into Alexandra. So, they were one of the first movers there. For a lot of the regional tech companies, Grab, Razer, C, they're all based in One North. So there's really an ecosystem in place already. And it's a viable option if you want more space, campus style, facilities or buildings. That's business parks really offer that.
Okay, so Chen Yang, you're looking at the market every day. Do you see, are there more of these big tech firms moving into the business parks, or are they going to continue taking space in the CBD? What's your expectation?
So I would say for the tech companies, I think there's no one size fits all. Right, we've seen some expansion for like Amazon. Right, they are choosing to stay within the CBD. Right, they're taken up like about over 300,000 square feet at the ROI Central Boulevard Towers. Right, but also we have seen on the other hand, because I think there's really very limited supply in the CBD, especially in the Grade A space. Right, when tech companies, when the kinds of the size, the rate of the expansion, right? They just take up full floors, 80,000 square feet, 100,000 square feet, right? If you want to consolidate all your operations, under one building, there's really no options for you, even in CBD. So for all of these tech companies, they would then tend to look outside the CBD, in some of the decentralized markets. So One North or the Harbourfront, Alexandra precinct, these are two popular locations for tech companies, and it's quite established, with all like Dyson, Google, right? At Alexandra, right? You have at One North, Razer, C. Yeah, so, and for these tech workers, it's okay for them because, it's not something new, right? The One North market and, Alexandra is quite well established, quite well amenitized, right? There's infrastructure is also good, right? And with more space, you can build in more gyms, hire more baristas, right? As compared to what I can get in the CBD. Yeah.
Okay, well, KK, I guess you're one of these tech companies. You're an innovation.
Not the likes of Amazon.
Oh, well, but see, we were talking about the broad spectrum of tech companies active in the market here. So is this something where you're going to start, obviously you're not at that scale where you're taking whole floors yet, but in terms of that, office selection equation, anybody who's running a team, you're constantly competing for staff. In Singapore, it's been an extremely hot employment market. Hiring an accountant, you're competing against these Blackstone guys to hire your accountant. You're competing against these Amazon people who think that they can raise money anytime. Would you consider moving to a second-tier location, or is that going to cost you staff? What do you expect?
I think the location is not the main concern. The challenge that we are facing is that most of the potential new hires that we are meeting, they are asking if there can be a balance between working from home and working from the office. So it's not so much of us moving to, say, Alexandra or somewhere, but more a flexible working hour kind of concept that the new hires want, or the millennials and the younger generation want. That's the challenge for us, actually.
So how much of a factor is that in the Singapore market? Is that are new hires, even, I'm assuming that you're growing a team, you're probably hiring a lot of young people. They're saying, hey, I want work from home because I already figured out my job and I know how to do this stuff, and you just check in with me once a week in a video call?
For us, actually, we prefer to have everybody in the office. I mean, it makes it so much easier. Then again, I guess you can attribute that to the fact that I'm old school, right? I still like to hop over to your desk and have a conversation with you instead of, I shouldn't be saying this, but instead of using Teams. But it's so much easier to have a discussion face-to-face. I know that that's a bit contrary to the fintech kind of a model, but I think for us to get things done, it's always easier when everybody is in the office. We are getting quite a bit of requests from the people that we are interviewing, particularly the younger generation. So this is something that I guess Raymond, our CEO, would have to discuss with the various heads of departments to see how we address this, because it may be a big factor in who we can hire for the right job.
All right, so it's a competitive employment market, it's a competitive office market, it's kind of an overly popular place to be all around, isn't it? I wanted to shift gears a little bit and start talking about urban regeneration in Singapore. And I mean, it's a big theme for the government. You've got a city, you've got buildings that were made in the 70s and 80s that are no longer attractive to people, and they happen to be in prime locations. So you've got major commercial strips in this town where a lot of the business still takes place, but those assets need a lot of work. So what's going, I was saying earlier, yeah, I think I've memorized every address on Robinson Road. Terence here has an asset there on Cecil Street, so a couple blocks. I used to work, I had partners that worked in the Bangkok Bank building there. Is that still there?
Bangkok Bank is...
There you're okay.
Yep. You say Bangkok Bank?
Yeah, Bangkok Bank.
Yeah, they're still there, I think.
All right, well, I have to go. I don't get over there that much. I just visit.
We redeveloped that building.
Oh, that's we'll talk about that. I have a story. Terence, I know you've got this project there on Cecil Street. Maybe you can tell us a bit about it. And what do you expect in terms of rejuvenation of that part of town?
I think the government has pushed for a lot of reinvigorating the CBD. So through their CBD incentive schemes, or they call it like a strategic development scheme, they're trying to push for all these new developments. And I think it's to bring more life into the CBD, really, because if you compare it to like the CBDs in UK or other places in the world, you know, our CBD in the past was really confined to just an office. But now we've have hotels, residential, that are all within the CBD context. And I think that brings a lot of this new vibrancy into the CBD. That being said, I think a lot of office buildings as well, like you mentioned, those in the 70s and the 80s are going into obsolescence. So, you know, you have to redevelop them at some point in time, you know, to bring them up to date. And you know, interestingly, I mean, if you segue back into like, you know, what employees want nowadays, you know, they want that kind of work from home alternative or optionality, you know, and to want them all to come back to an old traditional office confine, I think, you know, we have to move with the times to say, you know, you have that kind of live, work, and play kind of concept within the office building. So you have like sustainable features within it. You have areas that you can work from anywhere within the buildings. And a lot of these new futuristic buildings, they're future-proof with such, you know, different amenities where you can work in like the sky terraces or the roof terraces. You don't have to just work in an office confine. And I think, you know, if these buildings are there and allow for all these different, you know, I would say the new generation of office occupiers and office workers, then I think that will set the bar and future-proof it for not just this generation, but for the next as well.
Now, actually, your project there is a bit unusual, and most of the fund managers that you're working with a major fund manager on this project. Most of the time, oh, you know, that's complete. You're knocking this all down and starting over again, and it's complete redevelopment. Yeah, from a hole in the ground. Most of the fund managers, they're saying, gee, you know, how about a little bit buy, fix, and sell? That's more where we see the sweet spot. So is this something about that location, or is it more about the asset itself? Tell me more about that.
So we are doing a development along Cecil Street with our partner, LaSalle. So we were conceptualizing it as a grade A platinum building with all the sustainable features and with a focus on like well-being and you know, for the occupier of the future. So I think together with our partner, we conceptualized it, like I mentioned, you know, to have all these different features inside and to really cater it such that, you know, when occupiers come in, they feel like it's somewhere they want to go. You know, they don't just need to work from home, but they can have that kind of setting within the office as well. So yeah, we're looking forward to that one, and hopefully that changes that part of the CBD, and it trickles on to other new developments within the CBD as well. Okay, so I guess some of this may come from some of the incentives that, you know, some of the activity in terms of redevelopment. There's been the AXA Tower deal. There's been a few projects along that whole strip between Tanjung Pagar and Raffles Place. Maybe Xin Yang, you can tell us a bit about what's happening in that area and what kind of role you see the government policies playing in encouraging that.
Yeah, so I think a lot of this redevelopment, I mean, besides the CB incentive scheme, right, which, I mean, practically is bringing homes nearer to work, right? Right. Last time it used to be bring work near to homes. Right now it's the other way around. Right? The homes come nearer to boost more vibrancy. But it's also really, I think, it's really about the flight to quality, which has been really strengthened due to hybrid work. I mean, like what Terence and Chen Kien were saying, right? People now, they don't want to come to the office, you know, like the last time to the old office just to do their work, right? They come in to collaborate, to socialize, right? And I mean, to do business development. Right. So the way of offices has really changed, right? And you know, the offices of the future, right? You'll be, I mean, what we call it CNW, right? Destination office, right? Where you come in, right, to do a particular task in mind, get it done, and then you know you can go off afterwards, right? So with the CB incentive scheme, I think this, you know, I think the net effect of this scheme is that, you know, you reduce the number of office space, right, by bringing more homes and also more hotels into the CBD, right? And one factor of this is also because, due to this redevelopment, right, this drives a lot of displacement demand into the market, right? And with this displacement demand, what we've noticed is that for tenants that move out of these older buildings, right, I mean, some of them, they move to decentralized markets, which then, help rents in those markets. But we noticed that quite a number of them actually move to higher quality buildings, that flight to quality, right? And so when you have this kind of a driver, right, that incentivizes, when you see rents at the upper end of the market keep going up, that incentivizes more and more redevelopments down the road, right? And, but that self-fulfilling cycle of, displacement demand moving up, keeping vacancy rates low, higher rents, this then helps rejuvenate the whole, precinct, right, on the whole over time. Yeah.
Okay, so maybe there's some effective government action around there in Singapore. I'm wondering, Pang Wei, going back to your deal, so you have 2 assets now there in One North, and this is really, can I call this the One North a pet project of the Singapore government? This whole kind of, we've got the, I'm forgetting, you've got it used to be the Fusionopolis. You're in Fusionopolis, right?
That's correct.
And that's next to Biopolis, is that right? We've got a few, are there opolises that I've missed out here?
Mediopolis.
Oh, Mediopolis. Well, maybe I'll move there one of these days. I'm in media. Did these government initiatives help create the environment that made these investments possible, or was just sort of was that not really relevant to the decision? How do you see in terms of the effect that that's had in developing that whole kind of ecosystem around NUS? Has that been effective and that helped to create this environment, or was it not really that relevant?
I think the government is pretty focused on the decentralization and just to spread out the different business districts in Singapore. And One North is, I think a pretty successful test case. If you think about the quality of the companies that reside in One North, kind of that ecosystem that's been built out, it's been pretty successful. It's close to the university. You have a launch pad down there for some of the startups. So people are getting very familiar, and that's definitely a young sort of community in One North. The government, is looking at multiple decentralized sites right now. So that's in Woodlands and Punggol and in Jurong. I think it's hitting the market, from different directions. So I guess it's going to take a while to figure out whether those are going to be successful or not. What I can say is, with these new decentralized locations, it takes time to build out amenities, to attract people to travel all the way to Punggol, because not everyone in Singapore lives in Punggol or Woodlands or Jurong. But over time, as those communities get built out, like you've seen in One North, then I think it should well for the government's initiatives. But I do think that there's a case to be made for really reinforcing the successes of the city fringe business parks. The One North, Alexandra, they are decentralized. They are in the city fringe, so they're pretty easy to get to. And you have great companies there, so I think it's worth building those markets out. Okay, so there are these opportunities in terms of, given the transportation network, and if you come to Singapore as a visitor like I do, you're like, wow, Bangkok is a little bit more challenging transportation system than you experience here in Singapore. So I guess that plays a very big role in it. But at the same time, then the government also gets involved in a lot of projects. How much opportunity is there? So maybe Terence, is a question for you. I'm looking around, and how much of the market is dominated by Temasek companies? I hear fund managers telling me, gee, I could go in there, but Mapletree or Capital Land, they take up all the deals. Is there room in this market for private fund managers to find profitable deals, or are they taking all the good stuff for themselves?
You got to search harder, but yeah, I think there are some deals there to be made. There is a lot of people chasing deals in Singapore. I think underbidders who've missed out on other sides. A lot of people who have dry powder waiting to fire. So I think you just got to search harder. But like I said, I think office deals obviously are few and far between in Singapore, but I think there will be some deals that may come out. It's just that you probably have to pay at market or slightly above because there's just so little.
So a lot of competition out there in the market. Keeping on our sort of government theme, on our government role theme, the government's also been very, very proactive in pushing sustainability. I know of KK, for what you're doing there at SDAX, when we spoke with Raymond earlier, that this is really a very significant element of what you're doing. So does that emphasis on sustainability in the market here, does that help with getting real estate deals together? Is it a hurdle to overcome? How do you see that role of sustainability in your investments at SDAX?
I think for our investor base, particularly out of Asia, I think the focus is less on that. But as a company itself, ESG is one of our pillars. And that's something that we are very serious about. As Raymond had mentioned earlier, we have a team of ESG experts that will run the rule over all the investments that we have, be it in real estate or in other asset classes, to ensure that if it has a green stamp, that it meets our green framework before we would actually push it out as something green to our investors. I would say that it is probably still a little bit challenging, as Raymond mentioned, because I think most of the time, if it's a green deal, I think the borrowers tend to want something that's a cheaper rate of return, but whereas the investors may be just looking at the yield itself. I mean, unless, of course, if we are referring to the investors from, say, Europe, then ESG is definitely something that they have to focus on, which will make it a lot easier for us when we structure a deal.
Okay, so in terms of that, I know, Terence, for your building on Cecil Street, it's also very, very high green spec. Is this something that you saw as necessary for government purposes, or is it necessary because of the changing nature of the occupiers here in Singapore?
For our company, at least, I think we are very keen in all these sustainable practices. So from not just development, but from many of our investment properties in Singapore and overseas, I think we really focus on ensuring that we hit all the different ESG targets. But I think a lot of people feel like, sustainability is just a buzzword, but I think obviously climate change and so on is an existential issue, so it's something that not just ourselves, but the next generation take very seriously as well. So in particular, for instance, like the development we're doing, we're starting from ground up, choosing like reducing low carbon footprint, getting lower carbon emission kind of products, ensuring that the M&E system is up to date, and so on and so forth. So that brings down the operating expenses at the end of the day, but at the same time, it does have that effect on the environment at this moment. So that also ties in with a lot of, I think, owner-occupiers, office occupiers who need to hit that kind of different metrics on their ESG goals and sustainability benchmarks. So I think, I think moving forward is definitely something that all, if not most companies would definitely want to put on their radar to tie in with government initiatives, but also for their own company benchmarks as well.
For Peng Wei, I think let's look at this very directly. So you've got a couple of big business park assets out there in One North. You're generally leasing full floors or half floors only, I would guess. So of your tenants that are coming up, they're talking to your leasing team and they're saying, hi, I'd like a full floor in your large footprint building. Are there any of them that aren't going to have ESG criteria on their list of must-haves before they move in?
Yeah, a lot of the tenants are from large MNCs, usually more, the tech industry, so more progressive on that front. So it is becoming a big focus for them. Thankfully, say in Eclipse, that's a very green building already. It's got solar panels, everything's LED. You have a screen in our lobby that basically tracks all of the carbon emissions, like how recycling's been doing in the building. So our tenants love that. And it's increasingly becoming, an important factor in their space considerations.
Okay, so the ESG, pretty hard to work around it if you're doing offices in Singapore, it sounds like. Okay, I wanted to check in with Chen Yang. We've got only a few minutes left here. I still going back to your most recent office market report, and I believe, what was this? The biggest deal, biggest office investment deal was a floor in Samsung Hub. We've had at the same time, we've got record-breaking deals for floors here in Suntec City. Is the office market over the next year going to be dominated by these I am thinking these are all family office deals, pretty much. Is that accurate?
Yeah, so I think the kind of investors that are still really in the market right now, I mean, if you're yield sensitive, I think it's a bit challenging to do a deal in Singapore. Right? I mean, to be honest, even before interest rates went up, it's really not an easy market for use. For core funds, right? So the ones that are really, investing, they're still investing right now. These are your old family wealth or your high individual net worth or your family offices, which are not that have very deep funds in the balance sheet, right? They're able to deploy cash, right? And they're not that impacted by the interest rates. And these guys, they are, some of them they're looking for, to invest as a hedge against inflation, right? Because real estate, typically historically has always been able to outperform inflation, right? It's just really right now what's making things uncertain is the direction of interest rates. So if you have a lot of funds to deploy in the market, right? These guys, they are still able to go in, and probably they get lesser competition right now, right? Because all the institutional investors, they're probably holding back, right? So the deals that we will see, going forward, I think this will be of a smaller ticket size, right? Because of the uncertainty. So investors will still try to look in, but they're probably gonna, deploy lesser capital than what they would eventually, right? And we see a lot of capital actually just waiting on the sidelines. So I guess when we get more clarity on where interest rates will go, I think that's where we will see, all the capital start to move in. And by then, you will really see, I think, asset prices start to rocket up.
All right, well, maybe this is something where KK can provide us a little bit of insight. So if we've got very few office deals coming in now in Singapore, if you don't have cash on hand to buy your own floor, you're not going to be buying something very soon. So are then investors looking at other opportunities, other strategies around the region? What are you seeing there at SDAX?
We are seeing some interest in, say, Japan hospitality stuff. We are also exploring the possibility of working with a partner in Singapore shop houses. That sector has been very popular, and the yield has also been dropping a lot. But I think for it to work, we are actually exploring a fund based on a value-added approach, refurbishment and repositioning, and hopefully through that, we can actually generate the kind of return that would attract our investors who are on our platform. Yeah.
All right. Well, we've only got about a minute and a half left. We've got to talk quickly. So, Peng Wei, we've got a whole new year coming up. What are we going to see? What is your prediction, Singapore office market 2023? Is it going to be half of 2022, or is it going to be less? What do you think in terms of investment turnover in the market in the coming year?
It's the billion-dollar question. Look, I think the bid-ask right now is pretty wide between institutional investors and the sellers. I think on one end, the sellers are expecting 2021 pricing when your cost of financing was significantly lower. And then you see a couple of these trades like 16 Kah, Suntec, everyone's anchoring on 3,500 and above per square foot pricing. But if you look at the yields for prime office, and maybe I keep it to prime office right now, it's 3.2%. If you look at where the 10-year Singapore government yield is, it's like 3.5%. It's a negative 30 basis point spread. Historically, if you look over the last 20 years, that's 160 plus 160 basis points. So you would imagine that cap rates will need to move in order for transactions to happen. You've seen that obviously in the transaction activity in the market in this half in particular. It's been slow for the brokers. Nothing's transacting. So I think that bid-ask has to close. But there is a lot of patient capital and then not many assets to trade. So I think that, that gap might close sooner than expected, but it'd be great, I think, for the overall market if that happens.
All right, well, I am looking at the clock, and we have just run out of time, and we have a whole crew of panelists waiting over there very patiently. All right, gentlemen. Well, it has been for Peng Wei, for Terence, for Xin Yang, for KK. It's been great having you with us. Thanks for all of you.